quickly wanted to walk you through the AXTI trade that I took on Friday, why I took it, and the best way to trade it based on the indicators that you're looking at. So, the day trades that I'm basically looking for every day are the ones that are the most obvious, either because I think they're going to pop really huge or I think they're going to dump really huge. For this particular trade, AXTI had, we had a huge day on Thursday where AXTI pumped like 25% during the day. And then they had earnings that night and they pumped like another 35%. So the stock was up well over 50% coming into Friday. And as bullish as I am on AXTI and a lot of the stocks that pumped, the one thing that I try to do is, not just look at like trend lines and all of that, but think about what would someone who owns AXTI or any company that has pumped 50% after such a huge downturn do, right? Well, most people who are in that trade are going to try to lock in some of the gains. Maybe they're under the water and now they're just above, or it's just been such a huge day that the last thing they want to do is walk away from 50% gain and have the stock drop 25% the next day, right? So I just knew going in on Friday that AXTI had one of the biggest moves on Thursday and would most likely, face some selling pressure on Friday. So the first thing I did Friday morning before before the market had opened was I went and looked at SPY, QQQ, all the kind of the different like names like that to see where things were headed and what I think was going to happen. And just knowing that we typically have these bloodbath Fridays, I felt like after having a day or two or whatever it was of this huge sudden pump in the stock market, it was one of the biggest days I've ever seen since honestly last April after Tariff-Geddon had ended. I just knew there was going to be a lot of people taking profits, and AXTI was just such an obvious name to look for puts on. So going into pre-market, the stock was actually pushing up, but right before the market opened, you can see over here, the stock started to kind of level and started to drop. So the first thing that I wanted to do was get into puts at a strike price that was right below where the current price was as fast as possible, which is what I did. So I jumped in right over here on this candle, wherever it filled me. And I'll be honest, right when I took this trade and the price wicked all the way up, and then we had the next candle and it wicked down and wicked all the way up, and we started getting these green candles and it started looking like it was pushing up. I was kind of concerned about, could this run go further? But, stocks like this, even though they can move really big, they're not like these crazy biomedical stocks that typically move, 3, 4, 500% in a day. So it's like I said, I felt like 50% was already a lot, and we'd probably see some selling pressure. So when I got into my puts right on this candle, and it started to wake up, I was instantly down like $500 on my on my puts, and I just had to stick with my thesis and hope that it turned out right. Now, obviously, if this candle had started pushing up over here, if this didn't turn red and turn green and then green, I would have got out and just taken the loss, because the last thing I want to do is lose all my money and have this thing go up, right? So the second this turned red and started having these big candles, I instantly knew, okay, I made the right choice. I don't need to worry anymore. And what you want to do in these trades is basically hold on as long as you can. And I've seen a lot of these moves happen, and they all pretty much kind of play out the same way, where the price dumps really hard, it comes back up, it retests the 9 EMA, dumps again, tests, dumps, and usually these moves will last anywhere from 15 minutes to sometimes up to an hour, depending on how fast or violent the move is. Um, so so like I said, I got into puts here, and price started to dump. Now I didn't trade this perfectly. I wish I could say I made all the right choices, and I bought more puts on here, and I bought more puts here, but I didn't. I bought here. I held all the way down. When this started to curl up, um, I decided to take some profit right here. Um, and then after this rejected off the 9 EMA and came back down under the red orb here, I ended up buying more puts right here. And then I held them all the way down to somewhere around here, which is where I ended up selling. So I'll show you super quick the trades that I had made on it. Like I said, they weren't perfect, but sometimes in the heat of the moment, you don't always do what's best, which is why I'm trying to learn from it. So you can see I bought puts here. They came down. I closed on this green candle here. I should have added here, but I didn't. I let it come back down. I let it retest the bottom of the orb, which was now set after the first 15 minutes, so 8:45. So when this tested and rejected, I jumped back into puts. And then I wrote it down, and I should have held it a little bit longer, but it came down. We got a green candle, and I was like, you know what? I'm already up 50%. Let me just take my money, be done with the trade, and move on. So what I'm going to point out here is just a few things on how these stocks should be traded and how I'm hoping to trade them in the future. So obviously, any of these trades, you want to try to be on the right side. Either you're guessing it's going up and you're buying calls, or you're guessing it's going down and you're buying puts. Of course, you could just buy shares too. You don't have to buy the options, but why not have your money go up 100% versus 8%? So what you want to do is get into these trades as early as you can so you can get the best potential price before the move starts to really happen. And then you want to hold it all the way down. And so what you're looking at here is, first off, this big red line that you see here, this is the chill fair value band. Okay, so that's one indicator. Then I've got a 9 EMA. It's this blue line, but it kind of looks purple here. Okay, so this is the 9 EMA. This is the 21 EMA. This is the 50 EMA. This is your VWAP, the purple line. And then the orb is your green and red. So in a trade like this one where you're buying puts, you want to get in as early as possible. And when price comes down and tests the 9 EMA, typically you want to buy more puts. You want to add to your position. Now, what I've heard that someone who I follow does is when price comes down like this and starts to curl, they sell their puts, they sell the position. So let's just say I got in up here and price was $67.33, and I bought my puts at a strike of $67. When this comes down here, you're going to sell out of your puts, your $67 puts. And when price comes up and tests the 9 EMA like this, so let's say price is like $60.49. Okay, you're going to now buy puts at a strike of $60 or whatever's the closest number below where you currently are. So now you'll buy $60 puts, and by doing this, you can limit your risk. You've already taken your gains here. The strike is closer, so everything is going to be in your favor. You're going to gain more than if you're trying to rebuy the same puts you had up here or just add, because then you'll have two separate contracts with two different strikes, and getting out of them is going to take longer to get out of. So you kind of want to just have one. So it's going to come down. You can get out of your puts here. You're going to add more off the test of the 9. It's going to come down and test again. You can add more here. You can sell. You can add whatever works, whatever's easiest. Um, Again, if this is testing at $59, maybe you're going to be buying puts at 58.50 or 58 or whatever it is. Okay. And then when it starts coming down here, now as you can see, it's, for me, the time is a little different. So where I live, it's an hour different. So the market opens at 9:30, but for me, it opens at 8:30. Okay. So when price comes down here, you're going to do that same kind of thing, right? So you're going to sell out. You're going to buy puts. You can sell, buy more puts, sell. Okay. And now when it tests this 9 EMA, the bulk of the move has happened. If you look at the volume here, we had huge volume. Okay. And what's happening? You can see the volume is fading, which also means the momentum and the pressure of the selling pressure is fading, right? So buying puts up here, great. Buying puts here, not as great, but still solid. And as you can see, as you get lower, your risk to reward and the potential for the move to be as massive gets smaller and smaller, right? So when this starts to push above this 9 EMA and starts coming up to wanting to test the 21 EMA, it's less likely that the move is going to continue. You got lower volume, right? And there's a few other indicators that I'm looking at when I'm doing this. I don't just have this pulled up. I have these indicators over here as well. And let me see if I can shrink this a little bit so the indicators look a little bit more how I would see them. So there's a few other things that are happening. When this price is coming down, you can see just like the volume's up, you've got your big bars here on the Chill Momentum Elite. And the MACD and signal line, as you can see, they're far apart. You want to see that. The far apart is a good thing when it's dropping. And then as you can see, they start to cross and get tight and they start pushing up. All this is saying you're in a downtrend, but this downtrend is not increasing, it's decreasing, right? So even though price is dropping, the drop is increasing, the momentum of it increasing is actually, of it happening is decreasing, okay? This is the BX trender that I use as well. You can see price was up here. So we had these green kind of histogram bars that were up here as price was going up and they turned red. And what happens over here, right as before market opens, this red line drops. And when it drops below this line, it says downtrend. Okay, so all this is telling me downtrend is happening. Now all these like red and green and red dots are basically saying, hey, price is going to move up. Price is going to move down, okay? So as long as these are red and down, it says downtrend, even if these are green. This is just saying like the spikes that are kind of happening are green. And then we've got our RSI over here. As you can see, it drops below the yellow line. All that says downtrend. It starts getting oversold right here, okay? And it starts staying really, really low. But when this purple line crosses the yellow line, now it crossed here, right? But it was only for a short period of time. It fell back below. But when it crosses and starts staying above the yellow line, that says, hey, price is probably moving up, okay? So we've got this moving up. We got volume decreasing, MACD moving up. These green lines are getting bigger, okay? The RSI is pushing up, and then this is the Williams percent R. As you can see, this dropped, fell below. When it falls below the negative 80 line, that says all this is downtrend, downtrend, downtrend. But once it starts to break above, that says, hey, downtrend might not be continuing. And as you can see, when this starts to really push up, this is pushing up, pushing up. These turn from red to green. That says uptrend is about to happen. This crosses the zero line, uptrend. Look at volume. We had this volume dropping, and then what happens here as this pushes the 9 and then breaks the 21 EMA, the volume starts to increase, okay? So as I'm in this trade, I'm very cognizant of all these indicators and how they are working together to create a confluence to let me know that, hey, the drop is fading, right? So like I said, sometimes when I'm in these trades and I'm sharing it in the Discord, if I get in here and I share it and people jump in, that's the best time right after I share it. But if you're, 5 minutes late to getting into this trade, just know that your risk is much higher than your reward. So the last thing I'm gonna, I think, point out real quick on this particular trade is the one thing that I, when this comes down and the fade and the thing starts to like chop sideways here, you want to be out of your puts at this point. You want to have sold this. This is going to start chopping. This is moving up. You're anticipating that this move is going to be ending and changing. So you want to lock in all your gains before this happens. The one thing that I want to point out is the chill fair value band here is red. As long as that is red, that's telling you that you're in a downtrend. Basically, all of these kind of push-ups on the 9 EMA are going to fail. But when this flips from red to green, right here, see that red? That's telling you you need to be out of your puts. Something's changing, and we're going up. It doesn't mean we're going all the way back up, but it means that you don't want to be in your puts anymore. And you definitely do not want to be buying puts over here. There was someone recently that I follow who had missed this trade on another stock and decided to basically get in here hoping that it was going to retest the orb, fail, and drop. And clearly, if you look at all of this and know all of this, you can see that most likely that's not going to happen at this point in the trade. So that was the AXTI trade. There's one other thing I'll point out while I'm here making this video that I can talk about in regards to looking for calls and going the opposite direction. So let's see. So the market and most of these stocks all followed a very similar pattern. If I was to overlay the AXTI chart onto this, it would look very similar where we came up, we tested, we came down, we tested, and then we curled up, okay? So as you can see, this had this big push up. Okay, so this one actually had, it looks like a big push up right as market opened, and then it dropped, which this can fake you out. You get into calls here, but that's why, again, look, chill fair value band goes from green to red. When that flips, get out as fast as you can. One of the other indicators that I sometimes use when doing these trades is my DXE SMA. It's a 2 SMA set to open, and as you can see, this alerts me faster than anything. So it was green and it flipped red. Whenever I'm day trading and I use this and that flips from green to red, I get out as soon as possible, which would get me out here versus me getting out over here, okay? So what I want to point out on this particular trade is, the same thing. You get into puts when this flips. You ride these down. You can add to your position here or sell out and add. This part's a little scary here because it comes up, tests the 9, tests the 21 and the 50. But ultimately, you would have been out of your puts and then looking for a spot to add. When this fails is when you can add again, right? It comes down, starts to curl. You're going to get out of your puts. When that turns to green, you see that turn into green, and this is big green candle. Not just wicks, but look at this candle right here, okay? And let me pull up my indicators again. So just like I said with AXTI, you can see all the same things are happening. We had the big flush down where the MACD and signal line are far apart. All this turns to red. Purple drops below yellow. Williams drops into this box, minus this kind of pop-up that we had right here. Comes down, and then when we come down here, right, we see this jump above. The Williams pops up. This green dot starts to push up, showing the green bars. Chill Master Elite crosses and starts pushing up with space, okay? And again, the chill fair value band turns from red to green. So you want to be out of your puts here. And you don't want to jump into calls just because it tests the 9 or the 21. You want to really watch the trade and be safe. Now, when this turns green, there's a much better chance that, hey, buying calls probably ain't a bad idea. But do you want to buy calls up here? No. You want to buy calls when the price pushes back down. So you're going to anticipate that, hey, we had a big push down. This push lasted 45 minutes. That's a long time, okay? And these violent moves, they basically happen within 15 minutes to like an hour. So 45 minutes, you can bet, hey, we were oversold here on the RSI. Price is curling. This flips to green. So you're out of your puts, and you're watching what these candles are doing. They're testing. They're breaking the 9. They're testing the 21. This is green. If you want to go for calls, what you're going to do is you're going to buy the calls when the price pushes down here. You don't want to buy them up here. You want to buy your calls down here so you can get the lowest price and then get the biggest gain as price moves up. Now, after the first 30 minutes of market open, so from 8:30 my time, which would be 9:30 yours, down to 10 o'clock, which is 9 here, okay? After this, I stay on a 1-minute chart this entire time, but after this move happens and we're going to go to calls, we're past the 30-minute mark. So I don't want to be on a 1-minute chart anymore because there's a lot of things that start happening. You can see the price is pushing up, it's pushing down. You can kind of get faked out with a lot of this, and I don't want to be day trading any of this stuff. This is my day trade. Buy puts, sell my puts, close my puts, right? That's my day trade. That's the bulk of my money. At this point on, if you're going to try to trade this, you don't want to be buying in and out and getting faked in here and selling and buying and selling and buying, right? What you're going to do is you're going to go flip to a 5-minute chart, okay, with all the exact same indicators that I'm using. And let me go over to the correct day and time. Okay. So here is that move that had happened. And I'm just going to quickly change this to Heikin-Ashi candles so it's a little bit easier to see, to look at. Okay. So when this move happens, you got out of your puts here, okay, on the 1-minute chart, and you got into calls in here. Now, what you want to do is you want to get into your calls, and you basically want to set a stop loss below this big green candle here. See, so you see how this has all this weight to it? You want to set your stop loss right here, okay, on your options or your shares. So you're going to go into calls, and instead of getting faked out by all that stuff that you were seeing on the 1-minute chart that would have been super crazy happening in here, look at the 5-minute. Now, sure, here it comes up, It hits VWAP, it tests all this, it falls below, looks like it's going lower. Okay, but if you had your stop loss set here, it might get triggered. I'm not sure, but you day trade this for 15 minutes to 45 minutes for this particular move. You buy your calls as low as possible, set your stop loss, and just let this thing ride. And if you get stopped out, cool, whatever, right? And you miss this, fine. But if you don't get stopped out, you're not sitting here day trading all this. So this comes up, it comes down, and as you can see on a 5-minute chart, if you were just trading this, like you wouldn't be getting scared and anything. You would just be in your calls, and then as the day gets on, you close out your position somewhere up here, you know, and then you go about your day. So kind of a long video. Apologize for that. If you have any questions, feel free to hit me up. But that's basically how I trade those stocks and what I look for, and how I plan to trade it moving forward. So use the 1 minute for the first half an hour, or whenever the trend ends. Flip to a 5 minute. Buy your calls for the reversal if you think it's going up. Set a stop loss. Let it ride. Close it out before the end of the day, because you don't want to be holding these things and then have some crazy news happen. Just lock in your gains. Go enjoy your day, your weekend, whatever it is, and move on. So yeah, that's it. Thanks for paying attention, guys.